This is Gerardo Del Real with the Outsider Club. Joining me today is the president and CEO of Revival Gold, Mr. Hugh Agro. Hugh, how are you this morning?
Very good, Gerardo. It's a busy time in the gold business.
Busy time indeed. There's two types of CEOs right now. There's CEOs who are still traumatized from the brutal bear market that we're still coming out of, and they're being cautious and conservative. And then there's the other kind that fully recognize the market we're in and are being methodical but aggressive. And I think that definitely applies to your approach and Revival's approach to the drilling program at Beartrack-Arnett. You've now announced that you're doubling that program, which I love to see because, frankly, I think Revival is one of the best speculations just on what's already there, right? You have approximately 3 million ounces across all categories. I think you're rapidly going to head towards 5 million ounces. Before we get into that, can we speak a bit about why the pivot and the more aggressive posture? I've known you for several years. You are usually very methodical when you make these decisions. I don't believe this to be the exception, so I'm curious to hear the rationale behind the expansion of this program, which I was already excited about.
Methodical but aggressive. I think that encapsulates it, Gerardo. I think this is a year when we want to be expanding on our program, take some big step outs, do the things that our investors have invested in and want to see from the team. We have the capability. Our team, led by Steve Priestmeyer, has ramped up here, both with with geologists and with the drill contractor and with the permitting, coupled with our general manager Pete Blakely. These guys have done a fantastic job readying us for this moment. We're funded. And so, yes, we're being methodical, but we want to be aggressive in this market. It's the right time. It's the right project. And all of the work we've done over the last couple of years positions us to put in place the biggest exploration program on Beartrack-Arnett that we've seen since the 1990s.
You're testing 4 different areas. You describe the potential as game-changing targets at these 4 areas. Can you break that down for us a bit?
Yeah, the big game-changing target for us is at Rabbit. This is 2 and 3 kilometers south and on trend of the main mineralized zone at Beartrack. Recall that main mineralized zone we already know extends over 5.6 kilometers. So we're stepping out now 2 and 3 kilometers south of that. And if we hit in these locations, it really brings truth to the geological model for the area, which would suggest that we've got something 5 million ounces and north. We've got permissive geology. We've got a strong mineralization further north on the property. We've got Aeromag survey, which tells us that the structural intercepts are happening in this area around Arnett, the same kind of structural intercepts that we see in the northern part of the property. And so this is a first-class drill target for us. It's undercover. We don't have any surface exposure of the mineralization or of the structural elements. So it is green fields. But in that sense, it's game-changing. If we hit here and we can show that the structure continues down this far south in the system, why, we're really into a monster.
If you never found another ounce of gold in this market, you could stop today, and I believe you'd be a $253 stock, again, just based on what's already there. You are planning on quantifying the economics, and to that end, you're expecting to deliver a PEA, I believe, before year end. How are things progressing on that front?
We're making good headway there. It's an iterative process when you undertake these economic studies. You want to look at all of the potential scenarios for the site layout so that you can minimize permitting costs and timelines. You want to look at all the different potential equipment variables and make sure that you've got something optimal in terms of equipment and therefore operating costs. So we're going through all of those exercises now, as well as looking at the capital items, and I would say we're making really good progress towards our year-end deadline for getting the results of that PEA out. Just so your listeners understand that we're not simply rolling the dice on a greenfield target at Rabbit. We do have some less speculative drilling in the program this year as well. As you indicated, 4 locations for drilling. Rabbit is just one of those. On the other end of the extreme, we're doing infill drilling and resource expansion drilling at Haiti. This, of course, is in the oxide mineralized satellite ore body to Beartrack, to the main system at Beartrack. And here, what we want to do is add oxide leachable material, which might come into a future plan for the potential restart of our brownfields infrastructure at Beartrack. So the PEA is focused on this kind of material. We won't include resource additions from this year into that PEA. We might like to do that, but we want to progress with that PEA, and then we'll have in the future, intention is to have a pre-feasibility study or feasibility study in which we'll include any additions we get in the Haiti area in that oxide category. So bottom line, we've got 4 drill targets this year, 10,000 meters. We've got everything from infill drilling, resource expansion drilling at Haiti, to the more speculative, hit the lights out of the park kind of targets we've got at Rabbit. It'll be an exciting season.
I've been to the project. It's been a few years. The infrastructure is top notch. Can you provide, before I let you go, just a brief overview of the infrastructure advantage? Because again, in this market, where $2,000 gold seems to be kind of the new floor, if you want to call it that, the infrastructure advantage that Revival has is I think significant in being able to monetize some of what's already there in a timely fashion, right?
It's a tremendous, head start for us. We've got an ADR facility. We've got a water treatment plant. We've got leach ponds, with roads and power to site and active. It's a super situation to walk into. Gives us a head start on our capital and our plans and our timelines, and it also, gives us the benefit of experience of the past operation, which operated successfully. And we have the former general manager from that operation on our team and part of our PEA effort, and of course leading the charge on our site work and with respect to the community and our other activities. So not only do we get the infrastructure, the capital savings that comes from that, the permitting timeline savings that comes from that, the baseline data and understanding, but we also get the experience. So that means when it comes time for the engineers to think about sizing crushers or figuring out fleets, we've got a lot of experience. How do the pit walls respond? What kind of pit slopes can we be using? We've got all that experience that can come to bear, lowers the risk on the project, and improves the potential financial return.
It's a lot to like. What's the market cap right now, Hugh?
Plus or minus 70 million. And I think we've got super value for our shareholders, great option value with the gold price obviously moving higher, but also with the drill bit turning 10,000 meters this year. It's going to be a big step forward for Revival Gold.
And again, for those new to the story, how much of that market cap is backed by cash? Good point. We're at about $14 million today. It's a heck of a valuation for a company headed towards 5 million ounces at the very least, I believe. Hugh, thank you for your time. Is there anything else that you'd like to add?
Listen, I think this is a great time to be in gold. We've got the super example of the recent EIS progress at Midas, our big brothers down the road, and I think we're next in the breach.
I agree. Hugh, thank you.
Okay, talk to you later.